all that information is to the right, and the first information in the little, I think it's like a beige section at the top. Anytime you see those, those people paid to be in those positions, and it's called pay-per-clicks. So, and it's a form of advertising. So anytime they do that and they incur expenses, they have to account for the amount of money that they have to pay out. And in this particular situation, this individual, this particular company had to pay $100. Okay, they had to pay $100. So now your total marketing and sales expense, there are those brackets. And depending on where it's at on your profit and loss statement, or based on your particular company's need, that could be a good thing or it could be a bad thing. But in this particular case, what has happened is, you see that you had the $10,000, which is awesome, you had a lot of sales, but it cost you $9,000 to produce that $10,000 worth of sales, but yet advertising so that there was an awareness of your particular product cost you another $200. And there's a reason why I left this blank, okay? You're probably wondering why I didn't total that, because there's another section that's going to come up. After your marketing and sales, then you have general and administrative. And we're going to go into details on the general administrative. So, but anyway, work with me, and I've got one more section I'm going to add, and then we'll be finished, because I know a lot of people don't find this very exciting, but trust me, it's necessary. It's necessary for you to do this for your small home-based business, because you'll see when it comes tax time where this is going to come into play. Okay? And I'll give you a few examples of that at the end. Now we've added the general and administrative sections. The general and administrative sections of the profit and loss statement, I listed a few things, but I didn't list all the items just for the sake of this particular whiteboard that I have. Is kind of limited on the space, but you'll get the idea of what I'm trying to show you. Okay. Payroll, rent, repairs, utilities, office expenses. Office expenses are things like paper, ink, pencils, etc. Auto expense. Anytime you travel on behalf of business, there are different ways to deduct that, but we'll go into that in a tax section. And something that I didn't put on there were like travel. Like if you had to travel to, let's say for instance, you're going to one of your company's meetings, and or you going to how would you say, a seminar or a meeting that for your industry, and you had to travel to Atlanta, let's say, or California. Those expenses are deductible as operating expenses under the general administrative section of the profit and loss statement. So you can write all those off. And then you got meals that are incurred. And 50%, a lot of people under a misconception there, you account for 100% on your profit and loss statement, but on your tax return you'll only be able to deduct 50% of business meals, okay? Now that leads us to this number, the net profit, okay? Notice it says net profit or loss, because if this had brackets around it, then that would mean that you lost money. But as it stands right now, you had total sales of $10,000. You had cost of goods sold, that's expenses that must be incurred in order to get your sales, of $9,000, leaving a gross profit of $1,000. And then marketing and sales, you had you could take off $100 for commissions that you paid, another $100 for advertising, and you remember that was like the pay-per-click fees and things like that. That's come up to $200 that you will be deducting from the $1,000. And then you had the $70 based on general and administrative fees, for a total of $730 that you'd be able to put in your pocket for this particular operating period, whatever period this profit and loss statement is based on. And in accounting terms, we use period a lot, because that I mean, that's actually the term to represent like a month or a quarter, this period of the quarter, this period of the year. It's simply to represent a point in time, okay? But anyway, why is all this important? Yeah, a lot of you probably have fallen asleep and think that this is very boring stuff. But what happens is, in home-based businesses, we see on the internet these advertisements and on ways to make money, and people do make money. A lot of people become very wealthy because they realize that they can advertise on the internet that's working 24 hours a day, 7 days a week, and it reaches a global client base, okay? But in the end, we are going to do one of two things, or actually two things we're guaranteed to do in this lifetime. We're going to die, then we're going to pay taxes, okay? So, what I believe in is taking all legal and authorized deductions to reduce my tax liability. Now, would you just, based on the way some of you are running your businesses by not doing the proper accounting, you're paying tax on the $10,000. Are you hearing me? You ran into the building with your fire hose, all your protective equipment on, made the money, and then when it came time to put out the fire, the tax man, you got burnt because the hose wasn't pressurized, because you weren't prepared. You see where I'm going with that? Now, what is different about a business versus you as being an individual citizen? Businesses are not, they don't pay taxes on the gross sales. They pay taxes on the net. Now this is totally different for a lot of you because you've worked for years and years, and you've gotten your W-2, and when you got your pay statement, you saw that FICA and everybody else got their money first, and then you got what was left over. In business, it's the total antithesis. It's the exact opposite. In business, you get the money, then you write off everything, or you deduct any ordinary and necessary operating expenses, and then you pay tax on what's left over. Now, by you not properly accounting for these expenses that are incurred, advertising, commissions, cost of goods sold, utilities, office expense. Everybody has office expense. You got paper, you got printers, you got computer expenses. If you have a home-based business, I guarantee you got access to the internet. You have to pay a fee for that. And then another section that I didn't put on here, I should have, seeing that it's one of my professions, is legal and accounting fees, all deductible. You write all that off as operating expenses. Let me be clear, they're deductible as operating expenses to reduce what your gross income is to derive at your net profit. So out of $10,000 worth of sales, you actually only made $730. Now, let's say, for instance, this is the end of the year. Would you rather pay taxes or show income of $10,000, or would you want to show an income of $730? Okay? Now, as from a tax standpoint, I would rather show this particular number because that means you're going to pay less on taxes. Now, what we're going to do is we're going to, later on in the series of videos that I show you, we're going to go into how business structures, depending on different business structures, how they pay taxes. Because, just one quick point, if you were a single member limited liability company based in the United States of America, you cannot set yourself up as an employee and do payroll. Okay? You would have to do what is called, if you look on your 1040, you would have to do a Schedule C, but you would not be able to be an employee of the business. You would have to do a shareholder distribution in order to take money in and out of the business, okay? And in other businesses like your S corporations and things of that nature, or partnerships, you can take shareholder distribution, but you also are authorized to be able to make yourself an employee of the business. But we'll go into that in a later series, but hopefully this helps you helps you as the small business owner and educates you onto the importance of why you should actually keep good accounting records. Even if it's a simple spreadsheet, even if it's a simple lined piece of paper, anytime that you incur expenses, you need to write it down. And then there's also that feature called startup costs. Let's say, for instance, you haven't registered your business. And I'll be able to show you that in later series as well. You haven't registered your business with the state or with your local municipality to be able to get a license to be able to operate. When you set all that stuff up and you do all your research, that's called startup costs. Startup costs are deductible as well. Startup costs are deductible as well. So, I'm Keith Gooch, and I want to go send you into the fire with a pressurized hose because I don't want you to get burnt in the end.